Hey everybody, Preston Brent here with Trader User Group. This is our weekly roundup for the financial markets ending just about the first week in the new quarter through April 4th, 2014. We had an interesting week this past week. What I've got on the screen right now is pretty much how I started it off last week. You can see this upsloping channel that we have here. And it really started in Q4 of last year, but it picked up in earnest in January of 2013. And we've found the top and the bottom side of this channel pretty much all through 2013. We rode it up, and then we kind of got stuck on the highs in December until we finally took them out back in early March. And then, we spent most of March trending towards the downside, except for the last week in March, we moved up and then we gave a bunch of it back in pretty much one day this past Friday. So I wanted to provide a little bit of perspective for you just so that you can see here. This yellow line's the 200 EMA and the red line is the 50 EMA. And you can see here just that one hard day down didn't really damage at all the uptrend that we have. Now, we are entering a very unstable time as we go through earnings, which are going to pick up starting next week, April the 8th. I think after market is kind of a traditional kickoff with Alcoa, even though they're not in the Dow anymore. They've kind of been the traditional start to the each earnings quarter, and that's kicking up. I mean, it seems like we just ended our earnings for the previous Q4, but now we're coming into Q1 earnings, and I think we're seeing a lot of big guys, big money players picking up puts, taking some profits from 2013, and we're seeing some sector rotation too. So back to the S&P E-mini 500 future chart here. You can see here as I blow this up, I wanted to provide perspective to show you that we didn't have too much damage, although we did pretty much. If I were to box this thing in here, and let me just get my drawing tool on here for you. You can see here as I box this in, and I box in the week like that, right? You can see where we start off on Monday right here, right about at the end, and then we were ending the week. We actually took out the high, the end of the week, Friday morning at 1887.50, but then as a very bearish mode, we actually came in and closed lower for the week in one day. So we surpassed all the middle of the week and then just came all the way back up, and then we moved all the way down and we closed to the lower of this cycle. Now our daily chart still has me in an up bias on the E-minis, but for our members, I was recommending clearly the folks that I'm coaching as well. We had a sell signal at 10 o'clock in the morning on the EMini Futures. So it's a good way to hedge yourself for those that are still long. Now we can come all the way down, take out the 50 EMA, find ourselves somewhere in this area here, and then if it bounces, then that'll be a bullish sign. I don't think this time it may bounce, but we got to wait and see. The next resistance point is going to be the 1846.50. So this will be what I call our S1 level, our first level of support. We seem to find this very often. And you can see we were above and below that area for almost 2 weeks, almost for half of March until the last week in March. We just shot up and formed this really big intraday reversal on Friday and just gave it all up in one day. So now the question is this momentum going to continue into Monday, and then as we go through the week, is we're going to come down and test the 50 EMA, which is sitting very close to our first level of support at this 1846.50, or are we going to take it out, test the subsloping trend line, and then test 1812.50? Remember, back during this pullback right here, I said I could see the markets going down at this point in time to 1661. Now we came down to 1720, roughly just 1723, right about in that area there. But it seemed to me at that time the markets wanted to just keep going down, and then we had this reversal, and we had that V-shaped pattern, which is an unusual pattern for a bottom pattern, as it is for a top, because the bottom and the top Primarily the top. The bottom can be a little bit more spiky, but the top is it's just working and working until he finally gives it up. Pretty much like we're doing here, where we come down and then we kind of come up and then we make that final push higher just to say we took it out, and then the markets work it all back off. This also is all about sector rotation. There's been a lot of rotation going on here, as the markets have been in this kind of range bound mode, really from that price level to this price level. And now I don't believe we're going to come back up and take this level out again, right that area there, which let's just call it that little zone right there, which would include taking out that number there until we start to see the earnings trickling in. I think the markets are going to be more in a profit taking. Let's save let's hedge our profits. Let's see how the earnings season starts to matriculate through Q1 earnings. And we're going to get more defensive. And, speaking of defensive, if you look at Friday, the biggest move on Friday, one of the few moves that went up, was the utility sector. And the utilities move like bonds. And in times of stress, bonds generally go up and utilities tend to go up. Now, I had our members in some securities that did very well. I mean, in fact, everything we were in Friday did very well for us. And now one area that I would probably say kind of worked against us a little bit was bonds, but otherwise we had everything running very smoothly. I think we're well positioned in bonds longer term, but right now, as you can see, the markets are showing signs of weakness. So the E-minis fell about 1.14%. The Dow fell even less, 0.8%. You can see the Dow did fall down. Well, let me back up. I want to show you one thing on the E-mini chart that I didn't mention before. There was not a lot of unusual volume. I mean, the volume didn't really spike. You can see the volume right there. You can see my moving averages of the 5 and the 20-day moving averages as overlaid against the average volume. And you can see right now, for the last week, this big move right there was on very low volume. In fact, the volume was trailing as we moved through the end of the month. Volume was heading in that direction. So, there was not a lot of conviction in this move here. I think it was more profit taking than anything else, quite frankly. At least that's the way it appears right now, although money was definitely going through a sector rotation. If we look at but let me show you what brought me back to this chart here. If you look at the RSI, you'll see here on the RSI, we're at a key point right here. Number one, you can see where this area has held fairly well. And the markets really don't get too far below it. I mean, we did here when we had this big pullback right there. But generally, this is the 50% level, or the 50 in the RSI. Anything north of 50 is bullish because the prices are closing above the halfway point during the day. Anything below 50 in the RSI, prices are closing in the lower half of the trading range for the day. We're sitting right here now. What I would probably do is look at this and draw a line here like that and say if we close and we take these two out right here, which is just slightly below the 50, it's like about 48, and we come back down in this area again, then we're going to have a pullback like that. It's what I would believe. The other thing I wanted to show you is we got a high, and clearly we had a higher high right here. But look at the RSI. We've got that bearish divergence. And these things slip in there without you noticing, which means, we could probably have a little bit of a retest here. Maybe the momentum pushes it lower, an attempt up, and it could fail, come back, take that out, and then come back down here again. That to me would be an interesting scenario. This support here and move back up, people will say, the markets are doing what it's always done. It comes down and it bounces. It comes down and it bounces. So it's going to come down and bounce. More longs jump in, and then bam, it rolls back over it. It's kind of like a head fake, and then before you know it, we're here, and now we're testing down to this area down here at 1812. So I'm going to be watching for both patterns, a bounce off of this area and a move higher, and a continued move higher, or a bounce off of here, a little bit of a head fake, and then we come down and test this, and then here. And should this break here, the odds dramatically favor right around this 1723 area, which was the February key pivot low of 2014. So we've got to watch this very closely. Now, if we look at the Dow did not fall as far as the E-minis or the S&P 500. The Dow was only down 0.8%, um, um, not quite 1%. The E-minis was down about 1.14%. But if you look at the Dow, you can see the same thing. We've got this bearish divergence setting up here where we've got pretty much a high area here. We just about hit it there. We actually took out the high for the prior year in the Dow this Friday. So we made new highs in the Dow, which was really cool, but then we gave it all back up. But if you look down here at the RSI, you can see coming all the way back down, you've got that bearish divergence again. You can see where the 50 RSI is held up very nicely, except for that one little big downward thrust here. But generally, the 50 RSI is held up. If we break that and we break this area right there, then we're going to come back down here. And like the E-minis, we're going to come down and challenge that right there. All right, which is around 15.3 roughly. So we do have several resistance points to come through. This will be my S1 for the Dow, the first level of support, which is 16,162. The 50 EMA is just sitting slightly above it, but that's going to flatten out with this big down move like that. But you can see the Dow did actually close up. If you can see where we opened for the week right there and we closed for the week right there, clearly the Dow finished up a little bit, right? But it gave up most of the week's gains, especially when we took out the high of last year right there. We finally did that. Now, the Dow is obviously, it's only 30 stocks. They're big cap stocks, more dividend paying stocks. So traditionally, when the markets move up pretty strong, the Dow generally lags the other markets in the up move because they're bigger stocks. You'll see the Russell and NASDAQ lead the way up. And then when the markets fall, the Dow generally lags the rest of the markets as well on the way down because you'll see more money pouring into the large cap stocks that are paying dividends. So the Dow is generally bringing up the rear on both sides. But, and speaking of the Russell and NASDAQ, if we take a look at the Russell for a minute, now the Russell fell 2.2%. So the Russell had a pretty big down day. In fact, the Russell, it's been in this downward slope, and I've been talking about this for a week now. The Russell has been following this channel like this, okay? It's following that channel down. It has not come up and challenged prior highs. It did take out December highs, as you can see going back to there, and then the December high right there. We took it out very quickly, and then we kept up. But now it's just started giving it all up, and you can see this channel here. We also gave up the 50 EMA as well, and we're sitting at key support at 1141.10. I mean, that would be our S1 for the RUT, or the Russell Futures. And then we break that, then we've got the 200 EMA that's probably going to flatten like that as we're moving up. And we break that, and then that's the key pivot. So all these major pivots that were formed in February are going to be the go, no-go on whether this is going to be just another 7 to 8% pullback or a larger pullback. Now, everybody's talking about, I was reading the press, everybody's talking about how this is going to be the 20 or 30% drop. It seems like every time the markets start giving it up, everybody heads to press to say, hey, the market's going to be up 10 or 20%. You know, and they don't know. They have no clue. All we got to do is play the price action each day, and it'll tell us what we need to do, okay? Can't guess. But again, the RUT, as you can see, we've got this going on here, but that's not as much of a bearish divergence because we've been making lower highs and we've been making lower lows. That's the classic trend. Only the RUT has been in a trend to the downside the entire month of March, because this is the month of March right here. We entered March up here, and now we're down to here. So you can see the RUT traditionally leads the markets up and down. So if this is a prognostication of where the markets are going, it may not bode well for the S&P 500, and then it'll be followed closely by the Dow, because a RUT moves, or the Russell being small cap, moves fairly quickly. When risk is on, money flows into it. When risk is off, money flows out of it at a bigger rate and a volume than the S&P 500 and the Dow. Now, if we look at the one that really got gobsmacked on Friday, the Nasdaq. Now this is the Nasdaq 100, the largest 100 stocks in Nasdaq. And you can see here, this is an ugly chart. Nasdaq fell 2.4 and 2.4%. The Nasdaq Composite fell 110 points. I mean, it hadn't fallen that far in years. But the chart looks very similar, eerily similar to the rut. Okay. Again, here's that same pattern like this. And if I were to kind of draw it like that, the eye tells you exactly what we're doing. We're making lower highs as we're going down, and we're making lower lows as we go down. That is a definition of a trend. In this case, a downtrend. We took out the 50 EMA, which is now flat. The next one sitting here is going to be the 200. It'll start to flatten. It'll be right at that pivot point, and that's where we're going to sit. So, I would call it right around 34.20 for the Nasdaq 100 futures as a key pivot area for us. This to me is going to be our S1 level. Notice the S1 level and the others are fairly tight. For the Nasdaq, 34.20. Now, in Nasdaq, it's composed primarily of tech, right? And in that tech, one of the ones that just got gobsmacked is biotech. Biotech got absolutely decimated. And there's going to be some good plays in biotech as soon as we start to find some valid support, and it gives us a support confidence with what the indicators are telling us. That's going to be one that's going to be it's going to have like you're going to hear this whoosh sound like you're wearing Air Jordans, only it's going to be up to a dunk instead of falling down to the ground. Right now it's falling down. But NASDAQ and the rut leads the way down, and it leads the way up. Right now they're going down. All right, and they've been down in all March, which was kind of a heads up to everybody else that the Dow or the S&P 500 and the Dow were that way too. So I just wanted to kind of point this out. For our members, I've been telling our members for the entire year of 2014, let's play it tight. Let's not go in with larger position sizes. Let's protect our profits because 2014 is going to have a lot of volatility to it. And you can see here with the NASDAQ futures, if I just kind of put this on here like this, you can see where, right a little bit north of 3401, this pivot point, that's going to be our next test point for the futures. If I look at the, just so that I can show you here, the key sectors in the S&P, look at the biotech ETF, XBI, X-Ray Bravo India. This thing is ugly. I mean, it is very ugly. And look at the early warning that we had. You can see here we had a high, a nice little pullback, profit taken, and then a bounce. And then we had a higher high here. But look at the RSI. I mean, that is ugly. That is clearly, I mean, just like the other indicators, this is a bearish divergence from that point to that point right there. So that was an indication. We got a sell signal right in that area there, but this thing is just ugly. We're sitting right on the 200 EMA now. What could happen, because this was just such large selling, what could happen is we could have a bounce, like everybody's going to have a bounce. It's probably going to come up, hit the 50% fib off the top level, or the 38% fib right here, and then roll back over. Take out these lows here, and then find some kind of support here. Spend a month or two consolidating before we move up. That is what the charts are telling me this thing is going to do. Now that's not what it may end up doing, but that's what the higher prob trade is. So I'm going to expect a bounce. We may have another down day or two in momentum. You can see right here, if I were to lock this in, you can see right at that level there, kind of where we're sitting off these highs right there. This is a key area where it just bounced pretty hard off of, right at 131. So I'm going to be looking at this for a long side play. We could literally go down a lot further. We're still on an Elliott wave 3 down, so we could come down. The next level that I would call support would be right in this area right there. Okay, so about 120, 130 area, which was support back over here for over a week. But this was decimation. Now on the bright side, which shows you the utility sector. Look at the utility sector, folks. I mean, for the entire year, utilities is a risk off trade. Period. End of story. This is the entire year of 2014. Okay? And you can see we entered it right here, and we're right here now. So we entered right at this area, and boom, we're way up here now. That is not an an indication of risk being on the market. If true risk was on the market, this would be flipped around the other way, and it would be somewhere down around here. But this is really not a very pretty chart for the bulls in the equity market. Now, we are starting to get a little bit of energy oomph out of this, where we've got a high, a higher high, clearly a higher high. And if you look at it, we're starting to get a little bit of a bearish divergence. So that means the utility sector, if I was a contrarian player, which I am, I would look at the utility sector pulling back somewhere in this zone right there. Okay, somewhere in that zone is where I would look for, because this is kind of a support area here and a resistance area before it finally broke through. It came down, it tested it again, and then it took off. I think it's going to wind up back down here again and test this area. And then if the equity markets start to take off, it's going to come down and test that 50 EMA again. So if the equity markets do start to fly, this would be a reverse trade that you can do to the downside with the utilities. But it really got crushed. And if we look at the technology sector, same thing, almost 2% down. You can see the bearish divergence in the RSI. I mean, it was the same as the others, right? I mean, you can just see it going down like this, even right here. And if I draw it like that, from here, higher highs, higher highs, higher highs, and it's just this bearish divergence for the entire year. This is 2014 right there, all in a nutshell. It's just been working its way down, and then it's only a matter of time before it gives it up. And in this case, it gives it up in one day. That's kind of how these things operate. We're sitting on a key support area there, which is right at that area there. For the tech sector. If I were to, let me just lock it in right here. You can see how we broke a couple of key areas here. Now we're going to test this one right here, which really kind of comes out over here. Let me just see if I can move it. I don't want to do that. Let's delete it here. And let's move it over to the left so it gives it a little bit of a better picture. You can see right in this area right there. Where we're sitting. So this would be the next area. It's sitting almost just slightly south of the 50 EMA. We break that, then we're going to come down and we're going to hit this key pivot point right there. That's what's going to happen with this guy. So these are some of the primary sectors. Now another one that I am bullish on, and I'm going to look for a pickup, is the XLI, the industrial. By the way, Boeing, I'm a big believer in Boeing. It's had a pretty good little pullback, and I'm going to look at Boeing to go long again. But as you can see, the industrial sector, Boeing is one of the larger holdings in the industrial sector. You can see this thing was doing very well, but like the others, we got that bearish divergence. We're making highs, higher highs. We actually took out the prior high, but boom, we just gave it all up. There's the 50 EMA. I think this thing will kind of come down and test this area. We may even test this area again. If we can test this and hold, you can see right there we held a 50 EMA for over 2 weeks. If we can do that again and it starts to run higher, I'm going to jump into XLI again. And I may even go long Boeing, and I'll probably short the utility sector. So those are just some interesting trades that we'll be looking at in our group. We did a couple of other trades that worked out very well for us on Friday. We did some straddles. So far, we're hitting 100% on our straddles for 2014. In the commodity market, in the meats, we're doing lean hogs. We've been short. I call it my when pigs fly trade, because pigs aren't made to fly. So that's kind of where we're sitting there on that. Now another one that was really interesting. Let's take a look at gold. If we look at gold. You know, a big play on gold. Again, we had a little bit of a forewarning right here. We came down, we held the 200 EMA, but we gave it up. But again, we had the bearish divergence. And then we had this big, huge bounce right here. We're sitting just south of the 50 EMA. If we get across to the upside in gold and it starts moving higher, we're going to test the 200 EMA there. If we do that, I believe we'll move higher in gold. But we rode gold in 2014 to the upside. 2013, we played it to the downside. But right now, this was kind of a profit-taking mode. I got out. I told all our members to get out. And let's just wait and see how this thing plays itself out. While the rest of the market was cratering, gold actually moved up over 17 points. So let's just kind of see how this thing shakes itself out early next week. But that's kind of where we're sitting here. And you know the old adage, sell in May and go away? Well, we're coming through April, which is the last of the strongest bullish months. April is traditionally a bullish month. And May, June, July are fairly weak as a sell in May and go away. But which makes them even weaker is in the United States, American markets anyway. When you have a midterm election like we have in Q4, that makes the summer months even weaker. So sometimes that could suggest that we may get our 10 to 15, 18% pullback or even 20% over the summer months, and then we roll forward in Q4 of this year. So let's watch all of these. These are the things that I've got on my mind. We got a lot of other things going on in the, we got some things in the energy sector. We got some stuff in the transportation sector. We're looking at stuff agricultural-wise. We're playing corn. We're playing meats. We've got some things looking at in the currencies and in the bond market. So we got a lot of things going on. If you'd like to join our group and check us out, we've got a pretty good start in 2014. Come on in and check out in this email here that you played at the bottom. There's an offer that'll get you about 40% off the annual, and it'll get you there by trying us out for 6 months. If you like it, then I'd highly encourage you to sign up because it's we're doing very well. We've been running our group since 2008, so we're relatively new, but we've been in. I mean, I could not have formed this group at a worse time. 2008, 2009. I mean, it's just been nothing but downward, and then starting 2009 upward. So we got in at the middle of the downward action, but we've been successful every year. So check us out. Send me a note if you have any questions. Otherwise, everybody enjoy the March Madness playoff finals this weekend. And have a good one. I will be in touch with you later. For our members, we got our session tomorrow night for the upcoming week, and then I'll see you in our day chat room on Monday. Have a good one, everybody. Bye now.